Hello everyone. In this session, we are going to analyze Navi Nifty IT Index Fund NFO, which is launching on 3rd of March 2022, and date is 14th March 2022. So in this session, we are going to analyze for which type of investor this NFO is suitable according to their risk appetite and other factors. So IT sector is one of the fastest growing sector of India, and it makes the largest chunk of exports from India. And with the upcoming of Web 3.0 with AI and ML, the sector is going to expand and give higher and higher returns in the coming years. So let's analyze the fund. So Navi Nifty IT Index Fund is a open-ended fund, so you can invest in fund anytime and you can get back your money anytime without any exit or entry load. Minimum amount of investment is rupees 500, and category of investment is index scheme. So it will benchmark Nifty IT total return index and replicate the same stocks of this index of NSE. So investment objectives of this fund to generate returns by investing in the basket of Nifty IT index stocks, long-term wealth creation to invest in securities of Nifty IT index and aims to achieve returns of stated index, and it is subject to tracking error. So this fund basically, is making an effort to replicate the returns that Nifty IT index creates over the years with this new NFO. So investment strategy. So Nifty IT index represent the top 10 IT companies based on free float market capitalization. This scheme invests in all the Nifty index stocks in the same weightage. So the money invested by investors will be invested in the same weightage as it is in the Nifty IT index, and it is a free float market capitalization, which refers to that companies top 10 companies are decided upon market capital mark at the present time market capitalization stocks in the index. So the highest weightage of the stock in the index is Infosys with 28%, followed by TCS 27%, HCL 8%, Tech Mahindra 8%, Wipro 8%. So these top five, IT giants of India makes the chunk of the index, and they have been giving 12% to 15% returns over the years. So you can expect same returns with this index also. Index performance, if you see in this quarter, negative returns of 9%, and in this year also 9% negative returns. But in the long term, if you see in last 1 year, index has given over 43% returns, and in the period of 5 years, index has given 31% returns. So as you can make out, these are market beating returns, and returns are almost double of Nifty 50 index. But your portfolio get you really concise when you invest in this NFO. So depending upon your risk appetite and the opportunities of investment you are seeking, you should invest in this index. Comparative performance of index in last 1 year. So if we compare the index with other indexes in the offered by NSE, so Nifty IT index is one of the top performing index and stands in the top five index of the NSE. Top performing index in last 1 year has been Nifty Metal, considering the upward movement of commodity prices due to geopolitical tensions and health related issues coming up all over the world and supply chain disruptions. So these all are reasons due to which Nifty Metal has performed much better and given 70 to 80%, but Nifty IT also stands with 42% returns in top five performing indexes of NSE. Pros of investing in this fund. So this fund is diversified among the top performing IT companies in India, and investors seeking for allocation to IT sector with low expense ratio. So anybody who's seeking to allocate a part of their portfolio to IT and looking for a chunk of top performing IT companies with different weightages and low expense ratio should invest in this fund. Cons of investing in this fund: that it is riskier for short-term investors, since market due to volatile market and global liquidity disruption and geopolitical tensions, there might be some losses in short term. This fund is not suitable for your core portfolio. So this fund can be a part of your portfolio, but cannot be a core portfolio, because it limits your portfolio to only IT companies, which increases the risk in long term. Returns can't be expected to beat the market. So who should actually invest in this fund? So first time investors and conservative investors should avoid this fund, because the as you are investing in a limited category, so in long term you might see losses, and due to some short term disruptions you might see huge losses. So there are existing IT index which with less expense ratio and less tracking error, so you should consider that as well. Not suitable if you are looking for market beating returns or dynamic fund management, then you should not invest, since it is a passive fund. If you don't know when to enter and exit from IT sector, you should not invest. So try this one with a minimum investment if you are an aggressive investor and want to experiment newer opportunities and invest a part of your portfolio in this fund. So now consider your risk appetite and the vision of wealth creation and invest in this fund. Thank you.